In this video today, we're going to be looking at borrowing small amounts of money using credit cards. Alright, so we probably know a little bit about credit cards, plastic cards now. You can get a credit card from just about any business. They used to be really Visa and MasterCard and that sort of stuff, but pretty well anybody will sell a Visa card to you or give you a Visa card once you're 18. So usually they have an annual fee, and then they have basically some fees for interest, right, depending on what you do. All right, so once a month their card owner will be sent a statement showing the purchases made on the balances owing. Now that may be sent to you online now, rather than doing it by paper. All right, so if the balance owing is paid in full by the due date, generally they give you 1 month, there will be no interest charged on that. However, if the balance is not fully paid, then there will be interest charged on the balance, and that is generally done by compounding interest daily until the full balance is paid off. And the card owner, there's a limit. Okay, so obviously if you get a credit card that might have a $2,000 limit, so there'll be less money on the card for you to spend up till you get to that limit. Alright, so even though the card owner makes part payment, interest is still charged on that account daily. Alright, so whatever balance you've got there, you have to pay interest on that. Alright, so just going through these questions really quickly. So what's the annual fee? Well, that's a fee paid to the credit card to use your credit card. Alright, you have to pay that each year, or it might even have a monthly fee. Right, what's the approval limit? Well, that's the amount of money that they will loan you without having you to go to the bank and say, can I have this amount of money? So if I get a credit card which has got a $10,000 limit, I can spend up to $10,000 without telling anybody. Right? But keeping in mind, you have to pay it back. Right? So it's not free money, it's money that's loaned to you without you having to tell anybody that you're actually buying that item. So what's the statement? Well, that's what they tell you. They give you a monthly statement which tells you what you've spent. Alright, so it gives you the interest that you're paying, and you might even have got a cash advance as well. So it puts on there any fees and charges, and it will tell you what your minimum monthly repayment is. Alright, so your minimum monthly repayment is not what you have to pay off your credit card. That's the minimum payment that you have to pay your interest. Alright, so quite often banks are really happy for you to have a credit card and go through the process of paying them money, because most of these credit cards have a very, very high interest rate, anywhere between 20 and 30%. Alright, so they're quite happy for you not to pay it off. So if you think you're paying the minimum monthly requirements, then yeah, that's fine. That keeps you from going further into debt, but doesn't ever pay off the credit card. You'll be paying that amount forever and ever and ever. Right, so be careful with that. So when do you pay no interest on the credit card? Well, when you pay it off before the due date. So you have to pay it off in total before the due date, and therefore you don't pay any interest. So what's cash advance? Well, cash money taken out of your credit card at an ATM or in store. Right, so you can get actually access to credit with that. And what does compound mean? Well, that refers to the interest that we're using. So that's actually on the balance. Right? And after that interest-free period, it's on a daily basis. All right, so you pay your interest on a daily basis for that. All right, so that's example. Now in here we're going to be looking at your credit card statement. This is what it may look like. Alright, so here you can see the daily interest rate is 0.04%. Alright, so it's a 15.9% per annum. Alright, and then the available credit you have there, approval credit limit's $5,000. Available credit is $3,302.20. Alright, which means that you've probably already got about $1,700 on your credit card. Alright, due date for when you have to pay this amount, pay your card off. So your opening balance is $713. Now that doesn't quite match. That should be $4,000 limit then, I think. All right, payments received. All right, so that tells you what you've paid in total. This is your cash advances, what you've actually taken out as cash advances. All right, your interest charge from the previous statement is what's there. Your total number of transactions, and then your closing balance. So I know that's 5,000 is correct. Your closing balance on your credit card is what you owe the bank at that particular time. All right. Now what it's saying here, you have to make a minimum payment of $84.89. Now if you do that, what that will do will keep the closing balance at $16.97.80. If you want to reduce that, then you have to pay more. All right. So you need to keep in mind this is what's going on over here. So if we go to the particular thing, interest rate over the year is 15.99%. It is pretty high, but I've seen up to 30% for credit cards. And there are some credit cards that are interest free for 12 months, and they're designed for you to pay off your other credit cards. But most people get into trouble with those. All right. So if your annual percentage rate is 15.9%, then to work out our daily, we divide that by 365 days, and that works out to be 0.0438%. All right. What is your monthly interest charge? Well, that's your principal times by your rate times by 1/12. All the time it's 1/12 a year, so that's what it worked out to be, $9.51. So your total transaction for the statement is in fact stated there, which is $839.69. The closing balance, well, that's going to be your opening balance, take on any payments you made, add on the cash advance, add on the interest, add on the interest charges, your total transactions, and that will give you your closing balance on your credit card. All right, calculate the available credit you've got left. Well, the difference between your limit 5,000 and your total balance or your closing balance is what you've got left. Calculate the minimum monthly payment. All right, so $5 or 5% of the balance, whichever one's greater. Well, 5% of the closing balance is in fact $84.89. That's how they work it out. All right, come over here, the next bit. I think I might just leave that there, and I think you can read through that. I think it's pretty straightforward for you to do that. All right, so this is credit cards. Credit cards are great. I've got one. I've actually got two. They're great if you know how to use them. All right, so you've got to be very disciplined and very careful that you don't get yourself into debt. All right, so what they do allow you to do is get an item straight away rather than having to save up for it. And the great thing about it is you don't have to go to the bank and say, I want to buy this. You just go and buy it. All right, that's saying we trust you up to $5,000. You can go buy whatever you want because we think that you can pay your debts off. So that's how it works. All right, again, it's about working out what's going to work for you. All right, you might be a person that can handle this. You might be a person who gets a credit card and it will be the worst thing in the world for you. So just be very careful with it, but it is useful.